This is the Flipping Junkie Podcast, episode 33. Welcome to the Flipping Junkie Podcast. My name is Danny Johnson, former software developer turned house flipper, flipping hundreds of houses. Each week, we bring you interviews, strategies, stories, and motivation to help you get started flipping houses and on your way to becoming your own boss and achieving financial freedom. Thanks for spending time with me today. Now let's get to it. Hey, welcome back. Thanks for listening to the Flipping Junkie Podcast. Really appreciate it. Today, we've got Gloria Kelly from APIA Insurance joining me on the episode. We're covering the Flipping Junkie series, starting with motivation, mindset, all that kind of good stuff, up through team building, all the right people on your team, finding the right realtor, the right agents, the right closers, wholesalers to work with, all that kind of stuff for your team to work with as you start flipping houses and investing in real estate. Today, we're going to be covering the topic of insurance, with I think a lot of investors, even experienced investors, sometimes sort of don't do their homework and know exactly what kind of policies they've got, what kind of policies, what their policies cover, and all that kind of stuff. It's very important because if something does happen to one of these houses, you could be up you-know-what creek without a paddle. So we're going to cover some of that stuff today. Gloria Kelly and APIA have been doing insurance for real estate owned, for vacant houses, stuff like that for a long time. So a lot of experience there, and we'll get into all the good details. Now, APIA is an investor-friendly insurance company owned and operated by Gloria Kelly in Castroville, Texas. So that's not far from us in San Antonio. It's southwest of San Antonio. Gloria, she's got over 42 years of experience in the insurance industry and services a niche market, unoccupied, vacant, or distressed properties. So this is, that's their niche. That's what they deal with, are these, distressed houses that we invest in. And she got to start providing insurance for large financial institutions, REO portfolios, and has been employed by various large insurance companies over the course of her career. She has experienced all types of claims in her ever-growing knowledge in the insurance world. And they currently service investors all over the U.S., so you don't have to be in San Antonio or Texas. You can be anywhere in the U.S. And, they build strong relationships with clients because of their customer service, competitive pricing, responsiveness, which I can attest for all those things, and flexibility to meet the unique demands of investors. And, they offer investors opportunity to pay insurance in arrears. And it's especially important since investors are cash flow focused. Most insurance providers require insurance 3 months in advance, and you probably won't get a refund of the premium if you don't use it all. That's in some cases for other insurance companies and how they work. So it's really nice how they have it set up, and we'll talk about that in the interview. And, their policies are underwritten by Lloyd's of London, so good quality insurance. So I can't wait to get into the episode with her. And a word from our sponsors, which is us, with our software that we have for real estate investors, with REI Mobile, which is our CRM system to keep track of your leads, follow-ups, all that kind of stuff for your house flips. We just recently got out of beta, so we're now live. You can go to reimobile.com and check out what we offer there and sign up for that. If you have any questions about it, about REI Mobile or anything with the real estate investor websites at leadpropeller.com, you can call us at 210-999-5187, and somebody in my office will answer that call and answer any questions that you have regarding our systems. So be sure to check those out. All right, now we'll just go ahead and get into this interview and cover everything there is to know about insurance for real estate investors. Hello, Gloria, are you there?
Yes, I am.
Hi, Gloria. Thanks for being on the show.
You're very welcome, Danny. I'm excited to be talking about insurance with people.
Great. And, I'm really glad that we got to talking again and, for you willing to be on the show, because this fits really well within the series that we're doing and building a team. And I think when people talk about building a team for real estate investing, for some reason, insurance is always left out, even though that's a really big, important piece to any real estate investor's business.
It's a very pertinent part of it because insurance is to is to keep you from financial disaster. That is the entire reason you purchase it. So if you have invested money, you need to be, in the event of a loss, you need to be compensated for the money that you've spent. Build it back to where you were before.
Right.
And in insurance, I have always taken it on myself as I understand it. I've been in it 42 years, so I truly understand it. And I want my clients to understand it to a point where it's their money they're spending. It is their insurance policy. And even though it can be quite confusing, there's some basics that I think are vitally important, because what I talk about today, you can turn around and use it in your own personal life for your auto and your homeowner's policy. So I love to try to help people understand their insurance better.
Oh, that's great. So that'll be awesome. So could you give us a little bit of background, how you got into insurance and got into specifically handling insurance for distressed properties?
Sure. I'll gladly tell you that. I've been in insurance 42 years. I started with standard markets like Hartford. I worked for Hartford 6 years. I worked for several large companies for years. And I handled the last few years that I was in standard insurance, standard meaning that I handled everything. I have had my hands on everything. I have done homeowner, I've done personal auto, for years have done commercial. Commercial meaning property coverage, liability, umbrella, workers' compensation, commercial auto. I have a very good background in insurance. And I've been doing the investor business for, I guess now I'm about 21, 22 years. And the reason that I was so interested in this, I was able to be very good at one. Not so much very good, but I could have detailed interest in it instead of having a little knowledge about everything. So when I first started doing this, I was working with financial institutions, and I was insuring repossessed properties for banks or those that were going into foreclosure, called forced place. And I had a really large bank several years ago that had 4,500 properties. And once they started selling these off to different clients and investors, those investors could not get insurance for vacant, distressed property, because that is not, most of your standard markets have no interest in writing this. And the bank came back to me and asked if I would please offer it to their investors, and I did. And since then, I write very few banks, and I absolutely love working with investors. So it's been a wonderful trip for me working with investors.
Wow, so you definitely filled a void there where it was difficult for investors to get insurance for these vacant, distressed properties. I don't know, do you know how I actually found you years ago? I was listening to something by Steve Cook. Do you remember Steve Cook?
I certainly do, out of Baltimore.
Out of Baltimore, right? Yeah, I think he had mentioned that he was on a flight or something and met you or some people in your office, maybe Tracy or somebody, on a plane ride. I think he was talking about it and said that you guys were in Texas in Castroville, and I was like, well, that's just down the street for me. But so I thought that was pretty interesting.
It is, especially since we have clients all over the U.S. We even have some international clients now. So it is very interesting that just from hearing us talk about our insurance, he mentioned it. And Steve, I don't remember who it was that he had been introduced to, but I do remember for quite some time he would talk about us anytime he was doing a seminar. Yeah,
but he brought you some good business from that.
Absolutely.
Yeah. All right. Well, let's get started here in the difference. Maybe we can start with the difference in your policies versus standard homeowner policies.
Okay, that is a great place to start. All of us, if you have a home, you will purchase what is called a homeowner's policy. Homeowner means exactly that. Not only do you own it, you live in it. The homeowner policy is only available to a person who lives in the home that they are buying. It is, when you talk about the properties that we're insuring, these are more like rental properties or rehab properties, they will never be able to be written on a homeowner policy. I tell our clients all the time, a homeowner policy is the most wonderful policy you will ever purchase. The coverage on it is extremely broad. It provides not only your home coverage, but it also provides extra little things like if you were to have a loss that would make you have to leave your home for any length of time, it covers to provide you for rental, any place you would have to go rent. It has the liability. It is just a very broad coverage. If you go to someone's house and accidentally knock over a lamp, it will be covered under your homeowner's policy as damage to others. It's very broad. Not only is it very broad, it is the least expensive policy that you're ever going to be able to purchase. It was set in that manner so that everybody that owns a home will have very good coverage. When you have the ability to invest in other properties and you're able to have investment properties, the coverage is not near as broad. There are quite a few limitations in it. So when I have anyone calling and wanting to have a homeowner policy on a property that's going to be rental, I try to take the time to explain to them there is no homeowner policy for any of your rental or rehab. It is strictly a policy that is a very basic one, not broad. And I hope that your people in being involved with the building, if anything, they will understand that the coverage is very different.
Okay, so what are some examples of certain situations where, let's say an investor did have a house that was vacant, they were doing some work on, and some kind of real world situation that would happen where that would be a problem had they got a homeowner insurance on it?
Okay, that makes us talk about something that I've wanted to discuss with you. If it's vacant, your homeowner policy, every policy you purchase dealing with property, with real property, any rental property, any homeowner policy, your business policy, if you own a building and your business is located in it, they all have a vacancy clause. The vacancy clause will stipulate how long you can be vacant prior to coverage your coverage. It will explain it in the policy itself. Each policy is different, but it will either take your coverage down to maybe fire, and that's all you're going to have. You may not even have windstorm, or you may not have any coverage at all. Vacancy can be a real issue on a homeowner policy. If you're going to be moving out of that house and renovating your own home, which I've done before, and I'm sure a lot of people have done, you have to notify the insurance carrier that you're going to be out of it. And depending on how they want to handle it, I had to buy two different policies. I had to buy a builder's risk, which literally means a builder is going to be building it. And then I had to have another policy that insured just the property as it sat there, and I could only get fire and windstorm. I could not get any other coverage on it. So you can see if you move out of your homeowner, if you moved out of your home, it would cause an issue. If you bought a vacant home and got a homeowner policy on it, you would really have an issue. You would have just purchased a policy that would not cover that building at all because of the vacancy.
Yeah, because sometimes even if it has something where it says, specifies for however long, weeks or months, coverage for the vacancy, that could extend right past, from before you even owned it, because if it's been vacant for a year before you owned it, I think that plays into it as well, doesn't it?
Yes, it does. Yes. You cannot purchase a homeowner policy for a vacant property. It's prohibited. So you would need to be very careful in making your agent understand that the property is vacant. And yes, the homeowner is less expensive, but it also carries some heavy penalty if you misapply the use of it. You either have no insurance or you are so limited on the coverage.
Okay, and so What, if as another situation, what if you had a rental property that you bought and you put a policy on there that was a homeowner policy? What kind of problems, real world problems, could you run into with that situation?
Well, in the homeowner policy, it tells you exactly who can live in the house. And it is either the owner of the home or a spouse or a child of the homeowner. That's it. It specifies exactly who can live there. And it will not have renter, or if it's not listed as one of the people that can live there, then you're not going to have coverage. The coverage would be null and void.
All right. And so if there was a policy that was not a homeowner's policy, but sort of just like a fire coverage
Yes.
for rental or vacancy,
Yes.
could you tell us about those?
Yes. They also have a vacancy clause. Every policy has a vacancy clause. They have to address what will happen with the coverage in the event that you move out and fail to tell anyone. Normally, you will have, again, 30 days that you can have it vacant. Some states 60. And then depending on what company, some will just narrow the coverage. Others will tell you that coverage is no longer, it's null and void after the length of time of vacancy.
Wow.
The policy that we write for clients, we work with investors strictly and with vacant homes. That's more of our specialty, vacant or rehab or rental property. And our vacancy clause states you can be vacant forever for whatever length of time needed. We do not have any restrictions on it. So that's why it works very well for our rental properties, because if you have a renter, and I think everyone's had this happen, they might move out and not pay you for a couple of months and you're not aware that they have vacated the premises. So if a loss occurs during that time, say a windstorm, you will have coverage in place. Where if you have a standard policy, there may not be coverage.
Okay, yeah, that's, what's crazy too is over time, I'm sure you've probably heard things like this before, maybe not since you're dealing with selling the insurance, but I've actually heard other investors in the past talk about placing a bed or a mattress and some sheets and maybe some cans of food inside of a house to make it seem like if something did happen, they could say, well, somebody was living in there. And that's just crazy to me that they would take the chance and spend, make that kind of effort to make it seem like somebody's in a house, to cover the fact that they just have a bad policy for covering it.
Yes. Well, and Danny, there's a good chance that there was still no coverage. I mean, you can tell if someone, if it's an occupied dwelling or not, because most insurance carriers and the claims adjusters go out and see the premises and inspect the premises. And if you don't have any other household goods, you don't have pots and pans and clothes hanging in the closet, they're aware that this is just a setup to make it look like someone's there.
Right.
For all they know, they may think it's a squatter.
Yeah. And which wouldn't count, right? So.
No. Oh, no, not at all. And, it's such a simple thing, Danny. As long as you understand what you're dealing with, I would rather take the chance of having coverage than not,
Oh, yeah, definitely. All right, so what we were going to talk about insurable interest?
Yes. Insurable interest, a lot of people, and this is going to move right into named insured versus additional insured in mortgage or loss payee coverage. Insurable interest means that I have a financial interest in a piece of property. And if it should have a loss, I will lose money. And the insurance is to help me get back to where I was before. A lot of times people will go, well, it's my cousin's house and he's having a hard time getting coverage because it's vacant, so I want to put it on my policy. That's not going to work. Our insured does not have insurable interest. So unless we can't put it under Danny Johnson's policy for your cousin Joe Moore over here, because you have no interest in that house. You have no money that you have spent on that house. So the insurance policy will not respond to that. The other thing, the insurable interest, and we are very careful to do, is however you title your property, you need to make sure that entity is named on the policy. That is referred to as a named insured. So if you do Danny Johnson and each one of your properties, like 123 Main Street is going to be an LLC, but you own it 100%. You need Danny Johnson, and then we need to list every one of your little LLCs on, even though you're 100% owner. This way, you enjoy all the parts of the policy. A named insured is the owner of the policy. You get every coverage that is available under that policy. An additional insured, sometimes if you have a mortgage company will want to be listed as an additional insured, and this will play right into the next one. Additional insured is normally for liability only. The endorsements we can put on to add an additional insured, it is someone that has a liability exposure. I'll give you an example of that in a business sense. I own the building that we're in. I own it personally, not as a business. My business rents the building from me. So in turn, I have asked APIA to list me as an additional insured on the liability, because if someone were injured here on the premises, there is a very good chance that I would be brought into the suit because I'm the property owner. Does this make sense to you?
Oh, yeah.
That's an
Right.
additional insured. An additional insured is for liability purposes only. A lot of banks will say, I want to be added as an additional insured, and they want to be on there for the liability, but they don't own the property. They're only the mortgagee, so they're the ones lending the money. So we can do it, but it really serves no purpose for a financial institution to be listed as as an additional insured. Additional insured strictly is any liability exposure that might be there out of their ownership. A mortgage versus a loss payee, it just depends. Most of the time when you buy a car, the financial institution is a loss payee. It's just terminology. Mortgagee is someone who holds the mortgage on your house. I don't think we've ever heard of holding a mortgage on a car. Have you ever heard that term?
No.
So they just have a loan on the car. So, and a mortgagee is the person you have the loan, is the business or person you have a loan with. And they are always listed on the policy as a mortgagee. So in the event of a loss, the check will be made to the named insured, and we spoke about that early. That's the policy owner, and to the mortgage company, because the mortgage has financial interest in it. You will have to get both signatures to cash the check. That notifies the mortgage company that there has been a loss. They may put stipulations on it depending on the contract you have with the mortgage. They may want to see the end results of repairs prior to signing off on the check. And then again, the loss payee, we see that primarily when it's a car loan.
Okay. So basically, as investors, if our company, Joe Blow LLC, bought a house, as an investment, the name insured would be Joe Blow LLC. And if you got a loan from a private lender, Susie lender, then that would be the mortgagee on the policy.
That is correct.
Okay. Or if they use hard money or something, it would be that hard money company would be the mortgagee. What's the next thing that you want to discuss?
Well, we talked about vacancy earlier, so one of the things that I like, and I'm going to do the next two things I want to discuss, I'm going to do real briefly, because later on, hopefully maybe you'll have me do another podcast with you. These can get really sticky, but I want to just give you a brief explanation And, everything we learn is by rote. We learn the ABCs, we learn 1 plus 1 is equal to. And I have found that in insurance, it's the same way. I have to go over and go over and go over certain things. These two issues usually cause an issue. It's called actual cash value, and it's shortened to be, in the insurance industry, it's called ACV. It's actual cash value or replacement cost value, and that's called RCV. Actual cash value is determined by what it would cost you to replace the building today. Then it would be depreciated by the age of your property. Say if I had a roof, and that's my favorite one, that depreciates the most. If I have a composition shingle roof that is it's a 15-year roof, then, and it's been on for 5 years, for me to replace it, I would have to buy a brand new roof, and you can have the brand new roof, but we're only going to pay you on the actual existence of it. You only have 10 years left on the life of the roof, so it will be depreciated by the 5-year term. Now, I cannot tell you the depreciation percentage of each item, as everything is different. But what I want you to know, actual cash value means whenever you have a loss, it will be in today's replacement, but it will be depreciated by the age and use of that house or that portion of the house. Replacement cost means that you will insure it to the value that it would cost you to replace it today. Say if my roof, when I bought it, was $15,000, and then 10 years later it's going to be $25,000. Well, I have got to insure to make sure that I have a $25,000 roof on my house today. And that is replacement cost. You will get replacement cost, but the real trick of replacement cost is they mean it. You have to replace whatever was damaged. You can't say, well, never mind, I'm just going to take the money and leave. You have to replace it. You will first be paid actual cash value, the depreciated value. Once you repair the damage, then you will receive the additional funds for replacement cost.
Oh, interesting. And so obviously that would be more expensive as well, right, for replacement costs?
Absolutely. If you're going to insure it for a higher value, it will cost you more, yes. So,
okay. And with policies, do you specify whether it's going to be the actual cash value or the replacement cash value, or is that more of, based on what you're insuring, the amount that you're insuring for?
Most standard policies will have to designate whether it's replacement cost or whether it's a actual cash value. The policy that I write, we write on a replacement cost value. That's what we put that endorsement on. In the endorsement, it says if you have insured it to replacement cost, you get replacement cost. If you fall below what it would cost to replace the house, you automatically will get actual cash value.
Okay, so that's basically would answer the question of what happens if I underinsure an investment property and had a loss. Right. How is that? How does the insurance handle a situation like that? So let's say the house was maybe, replacement value of $150,000, but you only insured it for $100,000. How is that handled if something were to happen?
When a loss occurs, and I'm just discussing my policy that we write,
right?
Then you would be paid on actual cash value. Everything that you would be paid would be a depreciated value. But the next thing we're going to talk about is coinsurance. Have you ever heard the term coinsurance, Danny?
I haven't.
Well, that is the dreaded word in insurance, because normally if you have a replacement cost policy, and this will go into just what we were talking about, if you had a replacement cost policy, and that's how you stated it, and you told them, I'm going to write the replacement cost, and this policy will have a co-insurance valuation in it. Co-insurance meaning you and the insurance company are writing this together. If you fail to hold up to your end and insure it to the replacement cost, you will become a co-insurer. You will be penalized through this means. If you insured the house for $150,000, that's what you should have, and then you insured it for $100,000. We call that you did insure it for $100,000. You should have for $150,000. If you put the $150,000 over $100,000, you will come out with a percentage that you underinsured, and your loss, you will be penalized for that amount for your loss. So if it's, what is it? What's that? Let's see, 150 divided by 100,000 would be you underinsured it for. Hang on, we got calculators going in here.
What's about 66? I think
probably
it's really 66% of the value.
Then your loss will be, that's your depreciation. You'll be paid 66% of the loss. So you can see you can really be penalized.
Right. And I think a lot of people do that as investors, say, well, I'm just going to put the coverage at this amount to save myself some money.
Yes. And if your policy is a strict replacement cost, you will be penalized. Where ours just pays you the actual cash value, you will be penalized 66%. See, if you had a new roof on the house and that's what got damaged, but you were underinsured, your depreciation would be very little on that roof. If you had it 2 years, you'd just get the depreciation of 2 years. If you'd had that roof on for 2 years and you were underinsured, you'd be penalized and be paid 66%. Can you see what a difference that is?
All right.
And you just become a co-insurance if you don't hold up your end of the bargain. Because when you buy that replacement cost policy, you're telling the insurance carrier, I will insure it to what it costs to replace it in today's time. When you don't, then you become the penalty is that instead of 100%, you're getting 66%. You become a co-insured. You have just joined them in the loss. Does that make sense to you?
Yeah, definitely something you don't want to do.
No. Yeah. Co-insurance is, to me, one of the most difficult things for the layperson, the everyday non-insurance person to understand. And that's why when I was working with my policy, I just didn't want to have the replacement cost on there. It's too hard for people to understand that. They can certainly understand depreciation, but not a penalty.
Right.
So I find it easier for people to understand that. Do you have any questions on that?
No, I think that was pretty clear. And at the end of the episode, we will let people know how they can reach you. So if that wasn't clear, they can, we'll give a time at the end where you can tell them how to contact you to get more info about it. Okay. There were other things that I just want to briefly touch on to make people aware. On most policies for your rental policies, you don't have coverage for the owner or occupant damage. If you have a renter who moves into your house and you've just put in new carpet and they decided to do their bleaching on your carpet and end up with large bleach spots, it happens, Danny. It happens. I know. That's why I'm laughing. I know. Why did you have it happen last week? It's kind of unbelievable, the things that I am faced with, that is not covered by most rental property policies. It's just not going to be covered peril. That's why you get a deposit premium to cover this type of loss that is not going to be covered under your insurance policy. And I always like to bring it to the attention of the clients. They may not like to hear this, but
if an occupant damage is not covered, if they allowed their children to use marks a lot on all your walls and do their own drawings, it is not a covered peril. Our perils are for serious losses, tornado, fire, any type of, but not owner-occupant. I have had people tell me they've had this covered, and I have seen how it occurred, but on the normal, it is not covered, and I like for people to know that so that they're not upset when they discover that damage was done whenever the tenant moves out and the house has been damaged. That's not vandalism. It's
Right.
normal wear and tear. It's really not normal. Let's just call it wear and tear, not normal wear and tear, but it's not covered. That will not be covered under your homeowner policy, and I like to bring that to everyone's attention too. If you do damage to your own house that you have a homeowner's policy in, as broad as it is, damage by owner is not covered. As I have told everyone, if that were true, if you could have that coverage, I would redecorate about every 3 years.
Yeah.
New carpet, new window shades. I'd be busy redecorating. So
Yeah,
I think
makes sense why it's there.
yes. If you can't, why would you do that for rental property when you can't even get that covered for your own property, your own house that you're
Right.
living in? So the other thing that I like to bring to attention, I'm going to talk about flood insurance. People need to understand flood is a totally separate coverage. No homeowner policy, no rental policy. You have to, if you're in a rental zone, if you're in a flood zone, you need to purchase a separate policy for flood. It is an excluded peril on every policy. Our policy provides some flood coverage, but it has a $50,000 deductible. And you may think, oh, you'd never hit that. You'd be surprised what we've had happen with that $50,000 deductible. But it was also for people that didn't even know they were in flood zones, because flood zones change daily. Every time you put a new foundation in a subdivision, you've just changed the flood zone. To get a separate flood policy, you need to be in a flood zone. You can find that information from your city. You can go to your city hall, call them. They have flood zone maps. You can tell them the street where you live. They'll be able to tell you if you're in a flood zone or not. If you're in a flood zone, I highly recommend getting the coverage, because as you well know, over the past few months here in Texas, it seems like that Houston has been, well, all of East Texas has been inundated and flooded. It's a great coverage to have when a flood occurs, because they are devastating. Your homeowner policy excludes it. Our policy has that $50,000 deductible, so it's better if you buy a smaller deductible to get a $1,000 deductible, and we offer that. So I just wanted to briefly talk about flood so that people will know it's not covered on the standard policy. The other thing I want to, on our policy, and I think this makes sense it will make sense to you because you're in this business, inspections on vacant properties. If you have a vacant property, you need to inspect it. Weekly would be great if it's vacant. Our policy requires a monthly inspection. You need to go in, you need to make sure that no one's gone in and turned on the water, flooding, and because mold is not covered. And if you have a water loss inside your house and you leave it for weeks in hot temperature, you're going to have mold all over. Mold is an excluded coverage on almost every policy. I think homeowners provide some coverage, but all the others do not. So that inspection is vitally important to keep you from having losses that won't be covered by insurance. We also recommend you put some type of window covering over the windows if it's a vacant property. You're just getting rid of the opportunity for a theft. If I could stand in your front yard of your property and look to the backyard, you've got copper tubing in that house. You've got all kinds of things that I would like, or that it's going to be an attractive nuisance possibly for the neighborhood kids. So I do not recommend boarding up, but buy some type of paper shade to put on the inside of the window. So it's a question on whether it's vacant or not.
Yeah, it's a great point.
Well, I know that I do not sell this product, but there's one called Ready Shade that's excellent. It's pleated. It looks like a shade, and you can get it probably at Lowe's, Home Depot, no telling where you can buy it, but you cut it to size. So I highly recommend, and they're about $5 a piece. They're well worth it. So do you have any questions for me as far as vacant properties or flood or anything we've talked about today?
No, I think it's more of just so you mentioned inspections. It's important for people to have inspections, and you guys make it, really simple to do that because you have a simple one-page form that you just fill out every month and you hold on to it. We don't have to send it to you. We just hold on to it for our records. And then if there's a claim, then we'll show those inspection forms. And it makes it really easy to put that as part of our processes to make sure that we do every month.
Yes. Well, and you just put it in your file. So if we ever need it, you have it handy. So,
right.
And, if there's one thing that I just keep repeating that people need to understand about insurance, it is to put you back where you were before the loss. Put you back to where you were, not better. And sometimes it's going to be worse because you've underinsured. We've discussed that. But insurance is not a cure-all. You have to be diligent too, because if you have a loss, you're going to have a loss. It's time, energy. It's frustrating to get a loss handled and get everybody back in place. So just understand it's not a cure-all. It just prevents you from financial disaster, puts you back where you were before.
Right. And another thing I like about your policies is the ease of use. So whenever we're closing on a property, we have this, the form that we add properties to and
Yes.
remove from as we pick up properties and sell houses. And so it makes it very simple. And we're not having to call up, answer a bunch of questions and all that stuff and try to rush to get the binder up to the closer for closing. It makes it really nice. So I appreciate that. But so how can anybody out there listening that wants to talk to you more about what you guys offer or that have questions about insuring these investment properties, how can they reach you?
Okay. Let me tell you, our website is www.APIA protects in the plural, protects.com. We have a toll-free number. It's 877-752-2742. And we really appreciate people calling and having questions about insurance. We always try to make our clients understand we're the ones who deal with insurance every day. Instead of racking your brain or trying to figure out, pick up the phone and call us or send us an email. It is our job to help you with your insurance coverage.
That's great. And we'll include the phone number and the web address in the show notes that people can find at flippingjunkie.com/33. That's flippingjunkie.com/33. And there'll also be a flyer that I'll have that's available for download for Gloria and APIA that you can download from that show notes page as well to learn a little bit more. So please check that out. And thank you very much, Gloria, for taking the time to be on the show and answer our questions.
You're very welcome, Danny. And let me add this to it. If someone sends an application in to us and references that they heard about us from the podcast, we will send them a gift.
Oh, I didn't know you were going to do that.
We'll send you one too, Danny.
Okay, great.
Okay. But
right.
Thank you. I really appreciate the time.
Yeah, thank you. Have a great afternoon.
Thank you.
All right, another great episode on the Flipping Junkie podcast. Thank you for listening. Again, the show notes page is flippingjunkie.com/33. You can get the phone number in there'll be a link on there to go to their website, as well as have a PDF flyer for their company, what they offer, and how to contact them so that you can take that and print it out and have it. Definitely great people. Gloria and her team answer your questions. They're very responsive, and check them out. So thanks again for listening to the podcast, and be sure to check out reimobile.com. Like I said, we're out of beta. A lot of great features, a lot of ways to convert more leads into deals by setting up follow-up reminders, assigning tasks, working with team members, all that kind of cool stuff. So check out reimobile.com. You guys have a great week, and see you next week.